What's driving gold in 2025? Global recession risks. The IMF projects global growth to slow further, with major economies like Germany and the UK potentially entering recessions. This could weaken investor confidence in equities and support gold demand as a counter-cyclical asset. The dollar's path. The US dollar weakened towards the end of 2024, and it's expected to decline even further in 2025 as rate cuts by the Federal Reserve take hold. According to the World Gold Council, dollar weakness historically correlates with stronger gold prices. What does this mean? A weaker dollar will likely boost gold's international appeal, especially in emerging markets. Central bank buying is going to persist. Central banks are expected to maintain strong gold purchases next year as part of a long-term strategy to diversify reserves and reduce reliance on that US dollar. With over 70% of central banks viewing gold as a reliable reserve asset, demand is unlikely to slow significantly. Inflation is going to remain a key factor. Inflation may moderate in 2025, but it is likely to remain above those central bank targets. Moderate inflation environments historically support gold prices. What does this mean? Investors will continue to allocate to gold to preserve that purchasing power. Geopolitical risks will stay elevated. There are some key flashpoints, such as the US-China tensions, the Middle East, and economic decoupling. These will all keep geopolitical risks high, and gold will remain a critical hedge for investors navigating these risks. Growing retail demand for gold. There's a rising awareness of gold's tax advantages across the world, including in countries such as the UK, Ireland, and the US, an increasing ability to access this gold. This will drive retail demand even higher in 2025. The role of technology and sustainability. Green technologies, particularly those in the renewable energy sector, could boost gold's industrial demand. However, this growth will likely remain incremental compared to investment and jewelry demand. Where does this lead the gold price? In a bullish scenario, analysts are expecting gold prices to exceed $3,000 an ounce next year on the back of global recession risks, geopolitical crises, central bank demand, and monetary easing. But worst case, analysts are projecting gold prices to average around $2,400 an ounce, supported by steady demand from investors and central banks.